there any techniques you can use to try to determine if there are unreported cash transactions?
Of course, when I'm looking on the income side, one of the typical things that I'll do is try to find out what would be the typical markup of a product or service for this business and look at how this business compares to the typical, look at this business's history of markup. And now, since the divorce has been filed, has that percentage or that figure changed in an unusual way? That might be a tip-off that there are cash sales. We again look at expenses that are supposed to change with income. So for example, if I'm looking at a restaurant, the sales figures for the restaurant, as those go up, the cost related to food and beverage that's purchased should go up as well. If we see the restaurant's revenues going down, yet the food costs and beverage costs are still relatively high, I'm going to suspect that there are cash sales going unreported. Typically, business owners are, interested in reporting all their expenses on their tax returns, even if they're hiding income. And so a comparison of those expenses sometimes will reveal a situation where we might suspect that there are cash sales being unreported. So another way that I can potentially find unreported cash sales is by looking at documented expenses that would indicate the level of revenue. Great example is looking at a laundromat, looking at their water bills. If they claim their income has gone down, but the water usage has been the same as it has historically been, there's probably a good case to suggest that they've been hiding sales, hiding revenue. I look at payroll, that's another common one. If a company's sales are down, we probably would expect wages to go down at least some as well. If those wages don't go down, I'm going to be suspicious that there's unreported revenue. I also may look at asset purchases. Now, if the business owner is claiming that business is down and we look at the financial statements and see that revenue is indeed down, but they've been buying new equipment for the business, I'm going to question that. Of course, there may be a reason. They may have had some equipment break down and they needed to replace it. That would be legitimate. But there's also the potential that a business is adding machinery because sales are actually up and they just haven't been reported correctly. One other way that I like to look for cash sales that are being hidden is by comparing the ratio of cash to credit card sales and seeing if that has changed. So for example, going back to a restaurant, a lot of times restaurants have a very predictable ratio over time of cash sales versus credit card sales. And you can look at a history of a couple of years worth of financial statements and see what that ratio was. If that ratio changes after the divorce is being filed, where cash sales have dropped off dramatically, I probably have a good basis to believe that there are some cash sales that are being hidden.